Hello and welcome everybody to today's Commodities Corner. Just a very quick check-in, guys. You can hear me okay? Okay, fantastic. We apologise for the slight delay, a few technical issues there, but I think we're back up and running now. So just quickly, guys, before we get started, a very quick disclaimer for you to read, and then we will crack on with today's presentation. A lot of content to share with you today. Okay, so welcome everybody, of course, to today's Commodities Corner, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will be providing you with a watch list of trading opportunities. We'll go through a forecast of where we expect gold, silver, oil to head next, answering questions, and also we will be providing live support as well. So before we get started, let me introduce you to the Gold and Silver Club. Now, the Gold and Silver Club is the #1 commodity trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, so we'll just go and have a quick overview of the markets now, how they're performing so far as we head really into the last couple of weeks now of 2016. So we'll go big picture. We'll just see what the best performing commodities are over the course of this year. And we'll also take a look at after the post FOMC statement that we had on Wednesday as well, which saw the Federal Reserve increasing interest rate hike. So with that, let's go over first of all to the performance of markets so far this year. So in #1, pole position is ethanol with the biggest return over 44%, then heating oil up 30%, orange juice up 30% this year, crude oil is up just under 25% this year, soybeans up 20%, silver declined since the FOMC statement, currently up approximately around 14%. Cotton is up just under 11%. WTI crude oil up around approximately 8%. Okay, and some of the biggest movers to the downside have been cocoa, wheat, the pound, of course, this year, corn. So with that, what we'll do, guys, I've had a lot of questions and requests to go over this. So first of all, I just want to break it down for you and have a little bit of a closer look at gold at the moment, and particularly how it is performing right now, just following on from the FOMC statement just yesterday and where we are in terms of seasonality, just so I can break it down and talk you through exactly where we are at with regards to historical levels, seasonality at this time of year, what it means, the interest rate hike which has occurred. Okay, so if we have a look at gold here, we've got the historical patterns over the last 5 years, 15 years, and 30 years. So essentially on Wednesday, the Federal Reserve, they increased the interest rate from 0.5% to 0.75%, increasing it by 0.25%. That in itself was expected. To a certain degree, had already been priced in the markets. We were expecting an interest rate hike. There was a very high probability that that would happen. If the Fed hadn't have gone ahead with an interest rate hike, it would have put Janet Yellen and the Federal Reserve in an incredibly difficult spot, given how much had been priced into the markets already. So that was to be anticipated. Initially, we saw a move on the US dollar higher, gold and silver, chopped about a bit, not really too much action off the back of that. However, what has really caused this big breakout in the US dollar and now the subsequent breakdown in gold and silver has been the Federal Reserve forecast regarding future rate hikes becoming more optimistic. So in particular, the Fed has now gone from expecting two rate hikes in 2017 to 3 rate hikes. Okay, so that is a more aggressive line of interest rate hikes as we go into 2017, and that is what has caused the big breakout in the US dollar, breaking out to 14-year highs, and that has caused a sell-off on gold and silver, which have broken down fairly significantly from Wednesday's FOMC statement. So that just gives you an idea of where we are at the moment. Now, what we need to bear in mind is this time last year, we also saw an interest rate hike, With that, gold and silver did initially sell off, and with the FOMC statement and the press conference last year, they also, the Fed, suggested that they would be in a position to increase interest rate hikes 4 times over 2016. 4 times, okay? Only one has happened so far this year. So over 2016, we've only had one increase in interest rate hikes. And also last year, gold and silver, they bottomed after the FOMC statement. So within a couple of days afterwards, they found support, they rallied, they formed a low for the year. So it's very interesting right now where gold and silver are poised. They are at a bit of a make or break point. It is important to see how they close the week, whether they do rally to end the week closing back above some key levels, or if they continue this move lower. Today will be important as we go into next week. We could see a further breakdown in prices if the support levels are not being bought back into. It's a very important time for gold and silver going into the last couple of weeks. Now, a lot of you will be aware that the last 2 weeks of December, historically anyway, you tend to just see a lot of chop on gold, on silver, and you really want to get ready and anticipate the potential for the January effect at the beginning of the year. Now, we talked about this on the training session that we did on Tuesday. I'll break it down for you because we've now gone past the FOMC statement. You can see on my chart here, typically the move that you can get over January. This has been very consistent. Certainly over the last 3 years, we've seen between 900 points to 1,800 point rallies over the first few about 6 weeks or so. In 2013, I believe it was over 3 weeks, we saw over a 900 point move. And in 2014, we saw slightly more than that. It was in the region of about 1,400 points. And last year, over 6 weeks, it was 1,000. This year, sorry, beginning of 2016, it was a 1,800 point move from the beginning of January through to mid-February. So what does this mean for you as a trader trading on binary? Well, it means that there could be some really good opportunities lining up at the beginning of January as we see funds, investors getting back into the markets, and particularly if gold and silver have declined significantly still toward the end of December, we could see a really big up leg over the course of January in line with the January effect, in line with seasonality, in line with the last 5, 15, 30-year charts, and more specifically in line with the move that we've seen the last 3 years in a row. So it's just something to have on your radar at the moment. And again, is it a good, so I've been asked a lot of times, should you buy gold at this point? Should you buy silver right now? You know, they're oversold at the moment, following on from the FOMC statement. What can we look at? We need to look at how they close today. It will be important to see if they do bounce from the levels that they are at the moment. I'm certainly not ruling out a potential another flush out for gold and silver, where we see them break down lower again over the next 2 weeks during the Christmas festive season, where the liquidity gets less in the markets, volumes dry up a little bit. And with that, what we can see is just less traders in the market tend to see some odd moves and some quite volatile moves quite frequently around this time of year. So we could see some quite fast, short and sharp moves over the next couple of weeks, particularly the last week of December. But then what you want to do is get ready for the beginning of January, which is the January effect, which is what I would be looking and getting prepared for, really, with gold and silver. So I've had a lot of questions on that. I just wanted to break it down for you in terms of what we're looking at. You can see here, over the last 5 years, it's no surprise to get a decline. If we go to December here, it's no surprise to get a decline at the end of December. Now, typically, going back 15, 30 years, we used to see that uptick over the month of December, but more recently, we haven't. So over the last 3 to 5 years, we haven't seen gold and silver really get a good move over December. It tends to be more a liquidation of positions. Traders are coming out of their trades. They're banking profits for the years. They're closing their books for the years, and they re-enter in January. Okay, so I just wanted to break that down for you. Had a lot of questions on that, so I hope that just fills you in there. So with that, we'll go over to the charts. We'll do some analysis. Any questions or comments, do keep those coming. We'll be looking at 2 types of trade, the higher type of trade or the lower. If you select higher, you win the market. You win the payout, excuse me, if the price is higher than the entry price, and if you select lower, you win the payout if the exit price is lower than the entry price. So just to break that down and make it into very simple terms, if you're looking to buy, what you need to get right is the following 3 criteria. Entry price, time your entry well. Second, you need to get the duration. So if you want to be in 1 hour, 4 hours, 5 hours, 1 day, 24 hours, 1 week, get the duration right, okay, which is important. Of course, get the direction right, whether it's going to go up or down. Now, the benefit of using this type of trading alongside maybe other trading tools that you use, but even if you're exclusively using binary, the benefit of doing this is that you don't need to put on a stop loss, you don't need to put on a take profit, You just need the price to close within the direction that you predict, whether that's higher or lower within the specified time frame. So you can take advantage of volatility, you can take advantage of short-term momentum. You don't have to be sat in front of the screens managing the trade all day. Once it's put out, once the trade has been executed, you can just let it go and carry on with whatever you're doing, and you don't need to manage the trade. So it's certainly got its benefits. So with that, we'll go over to the charts. We'll do some technical analysis. Okay, so with that, I'm just going to share my screen. So bear with me as I do this. Okay, so a quick check-in that you can hear me okay, and you can see the screen. Okay, fantastic. Right, so make or break day for gold today. Why do I say that? Okay, right, so let's have a look at gold right now. It is bouncing today, isn't it? It's retracing at the moment. It's important. It is really important that gold, if it is going to form a spike low, which is where we came back down to around the 1120 zone, gold really needs to get above 1140 on a closing basis in order to hold above a major level of support. If gold can rally, and it's not too much, it's already rallied 150 points from yesterday's low. If gold can do it and get about another 50 points higher here into the close and get above 1,140 US dollars, the technical structure has held, okay? So you would expect the potential for a further retracement in the days to come. But if gold breaks down again and it closes below, let's say 1135, but 1140 is the key level, but if it closes below 1135, 1130, 1125, 1120, if it closes near the weekly lows here, gold is going lower, I would say, over the next couple of weeks. It's not going to have the legs to go higher here. It's really important what gold does today. So if we go over to have a look at the raw chart, and that's just over the next 2 weeks. So I'm not talking about January here, but I'm talking about the next couple of weeks. I'm looking at a few charts here. So I'm looking at the 10-year bonds, which have shown incredibly strong correlation to gold over the course of 2016, going back to May, most notably. They've been moving in lockstep. We got a hammer rejection candle developed into the close on 10-year bonds yesterday. We've had a bit of a spike higher today. 10-year bonds, if they continue to go up, you would likely see gold and silver go up as well. So again, gold will go over to this on a weekly closing basis. Okay, you can see this rejection candle forming, right? So you can see that forming on the chart. Now, this is where this is really important, because we have previously broken through levels over October 2014, December 2014, February, where we breached through levels. We've come as low as 1131, and then it's closed higher. You can see that, and from these points onwards, it rallied, okay? At least got a relief rally over the subsequent 2-3 weeks. It got a relief rally after it retested those levels, but closed back above it. So gold really, again, here at the moment, if you're buying gold, I mean, obviously, if you're selling gold, you're looking for a close below 1140. But if you're buying gold, what you want to see here on a weekly closing basis is a close. I would actually maybe go a little bit lower than that. I'd say you could get a little bit of breathing room around the 1135 to 1140, but really gold should try and close. It should close above 1140 in order to hold a technical major level here. So the 1140 zone would represent then a weekly rejection candle at this level, and then you might see a retracement next week and start to see a V-shaped reversal pattern base develop. So today during the US session, it is important for gold if it's going to hold this overall price structure. It's had a waterfall moment following on from the US election, following on from the FOMC statement. It broke down 400 points. It's just seen a lot of liquidation of positions. You've seen traders coming out of the trade here, and so far right now we're about 150 points off the low, so it has retraced from those levels. So we'll continue to monitor the price structure here throughout the US session today. If we go over to silver, you've got a similar situation on silver. Silver has come all the way back down to lower end of the trend channel. I would say major zones on silver right now to hold would be this swing low on the chart. Hasn't broken down as much as gold actually, following on from the recent decline. So you've got to remember, silver's still up around 17% on the year, and at the moment gold is up around, I think it's about 6 or 7% on the year now, so it's declined quite a lot more than silver. 1580 would be a line in the sand. If you get a close below that on silver, it's coming much lower, I would suggest, over the following couple of weeks here into the end of December. If it holds this level, starts to retrace, build up a base, it could start to rally from this zone as well. It could be a point that we do see a short-term low get put in, okay? So this is the zone. This is the important zone. You can see on a weekly closing basis where we've tested this level before, and it has been a zone, especially going back to 2014, where on a rejection candle basis, if we form a rejection candle into the close, we hold above this 16 zone, it could retrace and potentially have the legs to go higher. So again, it's a decision point for the metals here going into the close today. Will they get bid back up? If they close near the daily lows, if they have another big sell-off, it would suggest that we're going to see more liquidation of positions over the next 2 weeks, over next week into the last week of December. And then, of course, you get ready for the January effect. Platinum, same situation, although it's desperately trying to retrace at the moment. You can see it likes to break this level of support around the 900 zone and get back above it. You get these false breaks, these bear traps, and it's retracing again. So I'm really very curious to see how this is going to play out over the course of today. So gold, silver, platinum, also the 10-year bonds, watching this. If we get a break above yesterday's high, start to form a base here, we could get the beginnings of a V-shaped reversal pattern. It's still got a bit more work to do, but if you can imagine this sort of basing formation in the days to come and the next couple of weeks, if it's got the legs to follow through. What do I mean by that? It means if there's buyers, if there's enough buyers to come into this market over today's session into next week, we could see a V-shaped reversal pattern and a retracement back up, which could give a good buying opportunity short term for gold and silver at the moment. So we are at a very interesting junction as we go into the weekly close here. Now moving over to oil. Oil did represent a good opportunity to trade the gap off the open. So on Sunday we gapped up 5%. This gap to the open. Now it's very common for a gap like that to get filled. Okay, so when any market, you saw the previous week, gold, silver, the US dollar, they all gapped on the open. The previous Sunday, they filled the gap within 24 hours. Oil here, it gapped on the open. It's now filled the gap over Monday and Tuesday. It's come all the way back. It's come back down to a major supportive underlying trend channel here at the moment. We've got on a daily basis, we are following a rejection candle. So we are starting to see a bit of an uptick here for oil at the moment. And for those of you who are on our training session on Tuesday, what we discussed was the fact that oil here is also at a very important point where previous resistance, if this now becomes support, it gives oil the potential to trampoline higher, get back to $55 a barrel and all the way up to 60, I would suggest it could be the projections here. If it can hold here, if it closes on a week, you have to remember oil has broken above a major level of resistance at the 52 zone. It's been finding pressure there going all the way back to approximately June, July 2015. It finally broke that level, broke it with a big gap on the open on Sunday, 5% move. We've filled the gap, which is common, but now it's been battleground this week between the bulls and the bears, between 51 to 52 US dollars. So far, oil is getting bid back up. So what is the risk here with oil at the moment? I would suggest an entry on oil at the moment. If you are taking that on a shorter time frame, especially on the 4-hour chart, you could go for just a breakout higher here for the price to close higher by the end of the day. The risk at the moment with oil is it's gapping a lot at the weekend. So it could gap up, it could gap down. So if you've got a trade, a swing trade that you're leaving on over the course of the weekend, you do run the risk of quickly either losing or winning that trade depending on whether oil gaps on the open or not. If it gaps up or if it gaps down, depending on what fundamental news comes out over the course of the weekend. But I would suggest for a short-term trade, if you're looking for a 4-hour breakout trade, you get a break above $52.50 per barrel here, you could go for a price to be higher and look for that to break out to the upside. In fact, let me just put it onto UK oil here as well. We've got US oil, just go over to UK oil. Just give you the levels that I'm looking at with UK oil as well, which is Brent crude oil. Okay, so essentially on Brent crude oil, you'd be looking for a break above approximately about $55.20 per barrel, break above that resistance, and then we could see some short-term momentum, price to be higher by the end of the day, 2 rejection candles on the daily chart. It is finding some underlying support here at the moment. You've got a bit of a pennant formation actually, which you could just draw on. You've got overhead resistance right now, which is marrying up to $55 per barrel, and you've also got underlying support building pressure here as well. So you could draw on a couple of different levels. We could also draw this level on here. You could argue that that is a pennant. Essentially, you can see oil loves to break out from pennant. It likes to develop these pennants because support trend channels, oil traders tend to follow these trend channels really well. So when you get a breakout from a channel like this, a pennant formation, often it leads to quite a significant move. So I would watch out for that on oil, potential for a breakout trade above 55. If it breaks through support at approximately $53 per barrel, then it could be good for a sell short. But it's again, it's an important day for the energies here. We're also seeing some good opportunities on the agricultural markets. You can't trade those on binary, but just to put it on your radar, the agricultural markets like sugar, coffee right now, wheat are looking quite lucrative also. So those are markets which are looking very interesting today over the course of the US session, so we'll continue to monitor those. But in terms of the main markets which you want to look at on binary for the commodities, certainly gold, weekly closing basis, a close above 1140 will hold this overall technical major zone at the moment. If it breaks below that, it's got the potential to really sell off significantly. How far could it go? I mean, I've been asked that a few times. Certainly could get down to $1,000 US per ounce. So if we hold above this level, it's got the potential to retrace up to 1200 to approximately the 1230 zone, because you could imagine that would be the equivalent to what we've seen previously. Going back to December 2014, a retracement from these levels could lead us back towards the 1200 to approximately 1230. Okay, that zone, if we get a retracement, needs to mimic what happened here back in December 2014 in terms of holding on to that level. It can spike low, it can spike down, has to get retraced and build a retracement back up to that level. Otherwise, if it breaks near the lows here and we just crack through this support, we're very likely to see the same sort of pressure that we saw back in July 2015, where you get a close. If you close below support like that, okay, you can see that hopefully on my chart, then we're going to see a lower price here, and then you can get in for a sell short essentially next week on a close below, or a break again below the weekly lows. So you break below 1122, you take that down for a trade to be lower by the end of the day or within 24 hours. That's what I would look at, and I would look for the price to go lower. So this close today is really important for gold. So as we come into the 16th of December, then we've got 2 more weeks of Christmas. Over the Christmas period, that close will be very important. Okay, so 1140 is the magic number right now for gold. That's the level it needs to close above to hold this and look for retracement higher. A close below that, I would suggest we're going to break down to at least 1100s, if not lower, maybe 1080, maybe even lower than that. So yeah, it's a big day for gold. It's a big day for the metals. So with that, let me just talk you through the top trade of the week that we've had over the course of this week. We've had a number of different trades, a number of different opportunities. I'll talk you through the first trade that we took this week, earlier on in the week, which was crude oil. Very simply, we had a gap fill trade. So it gapped on the open 5%. We looked for a full trade for the price to be lower, entering at $54.90 per barrel. Price to be lower, and we've essentially come out of that trade. It's delivered, filling completely the gap by yesterday. So that's been a nice little sell short opportunity. Now, if you do want to get kept updated with all of our live trade ideas, entry levels, exit levels, take profit levels, you want to join us on our live trading room, you want to join our private members academy at the Gold and Silver Club, you want to find out more, get the same trades as we are taking, ready to implement, do just make sure you go across to www.jointhegoldensilverclub.com and you'll get exclusive access to our private members live trading room. Again, when you make an application, please do mention that you've been on today's binary session. There's a special offer for clients from binary.com. So just mention, if you do make an application, we get a lot of applications at the Gold and Silver Club, but if you specify that you have made an application and you've been on a binary.com webinar or you're watching the YouTube recording, that would really help us and help you to take advantage of the special offer. Okay, so what does that include by being a member of the Gold and Silver Club, and who's it for? So whether you're a new trader, you just want to develop a solid understanding of the markets, fast track your results, or even if you are an experienced trader but you just want to learn more about commodities, take your trading just to another level, the private members live trading room is definitely something for you to consider. You get access to live trading room webinars where we go through all of our analysis, we go through profitable trade setups, entry, exit, take profit targets, fundamental analysis, major news items. It is essentially an extension of what we've done today. We go into more detail, we're covering more markets, we're providing you with more analysis, and it's very, very interactive, and we host those during the week. And you can get access, so if you like what you've seen today, you can get more of this, you can get access to more of that. That's pretty much what I wanted to go through with you guys. Hope you've enjoyed that content. Again, if you would like to get in touch with us and become a member of the Gold and Silver Club, it's www.jointhegoldensilverclub.com. With that, I wish you all a fantastic Christmas and New Year's. I believe that is the last Commodities Corner for 2016. So we'll definitely catch you back here in January. Bear in mind what I said about the January effect. It's worth just having that on your radar. If you would like to become a member of the Gold and Silver Club and be kind of kept updated in the markets over the next week or so, do make sure you just make an application to join us. And yeah, with that, guys, we wish you a fantastic Christmas and New Year's. All the best, good trading, and we'll speak to you again in 2017. Okay, take care, everyone. Thanks, guys. Thank you, Sharice. Thanks, everybody. Take care. Bye-bye.